So, good evening, everyone. Thank you again for joining us for this exciting session on the FinTech Summer Sessions. This is our second week. So, if you are just joining us now, welcome to the FinTech Summer Sessions, third edition. This is obviously for 2024. We're very happy to have you all with us. If you are returning, thank you for returning. Looking forward to seeing you in all the other sessions that will be following this week's session. So before we get started, I'm gonna just give you a bit of background about this specific session and the importance of payment within the fintech sector in general before passing it on to our amazing speaker that we have for you here today. As if you go back and if you haven't done so and you'd like to review and get a bit of insights on what was done in the first two editions of the FinTech Summer Sessions, I highly encourage you, first of all, to go and revisit on our YouTube page. The links, you'll find all the links in the chat, our YouTube page for the previous sessions of the FinTech Summer Sessions. And you'll see from the first edition of the FinTech Summer Sessions, we started talking about payments. And we've talked about payments in the second edition. And today we're talking about payments again. Yet, once you go back and you'll see, you look at it, we started by talking about digital payments in the first edition and the importance of digital payment in growing the fintech ecosystem and as an enabler. In the second edition, the session on payment was very much focused on payment in KSA and the payment landscape in KSA in Saudi Arabia. Today's session is digging even deeper into the payment sector within fintech, and we're going to be covering quite some technical topics today under payments. But I promise you, we have Amran with us today has an amazing presentation, and I'm sure is going to be able to deliver those technical components in a very simple to understand way for me and everyone else as well. But I do highly encourage that you go and visit the first edition and second edition of FinTech Summer Sessions. And specifically, if you'd like to get more information on the topic of payment, the sessions that are specific to payments. So without further ado, I'd like to, first of all, give you a bit of a background and intro about our speaker, Amran, today with us. We have a veteran for you, a veteran in the technology industry and in the banking industry as well. He has over 24 years of experience and has worked with worldwide renowned companies like Microsoft and Temenos. Temenos, by the way, if you don't know, is a leading core banking and digital banking company. So Amran has done a lot of work both on the technology side of things, but also on the fintech and banking side of things as well. And that's where payment is at the core of that. And I'll let him speak to that at a later stage. Today, Amran is with BPC. He is a leading digital banking and platforms at BPC. BPC is another one of those pioneering organizations that's focused on digital payments, and it is headquartered in Switzerland. So without further ado, I'm going to pass it on to Amran. Amran, thank you very much for being with us here today, and we are super excited to have you talking about payment innovation in the financial services. So over to you, Amran.
Thank you, Karim, and good evening to everyone. Thank you to FinTech Saudi for having me for this session. Thank you for everyone for joining us as well. Payment innovation in financial services is a very hot topic. Keeps evolving every day. I can keep going on about it the entire evening, but I'm asked to restrict my session to an hour. So within an hour, I'll try and give you as much as I could in terms of getting you up to speed in terms of innovation we see in financial services around payments. Before quick agenda, we'll run through a quick journey of the evolution of payments. We look at What are the key enablers of digital payment innovation? What does wallet ecosystems do in terms of innovation for payments? What does the future of banking look like? What are some of the aspects of merchant payment ecosystems? What do we see as innovation at the point of sale? Some aspect of tokenization. As a result of all this technology and innovation, what's a new reality that we're looking at today? What are the forces that is impacting this new reality? We'll talk a little bit about embedded payments, and we'll put it all together in terms of how all of these different components that we spoke about comes together to form a digital payments ecosystem. And obviously at the end, we'll hopefully do a Q&A session as well, right? Now, before I start off, quick question. Do we all agree in this audience here, do we all agree that banking services will continue to be relevant for us as consumers? So you as consumers, do you believe that banking services will continue to remain relevant for us? If your answer is yes, just give an yes answer in the chat box. If your answer is no, just say no. You have 30 seconds to answer. Give me some feedback. Do you think it's going to remain relevant or no? Yes, if it's relevant.
So Amran, I'm looking at the Q&A because the chat is closed here, and we're getting a lot of yeses across the board. There are a few no's coming in, but the majority are yeses.
Okay, absolutely. So that's great. I think we're off to a great start. We all agree that banking services will continue to remain relevant for us as consumers. Now, the next question is a trick question. You need to answer with a little thought. Whilst we agree that banking services will remain relevant for us, do we also agree that banks may not be necessary for banking services in the future? Yes or no? Do we also agree that banks may not be necessary for banking services in the future?
So again, Amran, I'm getting many yeses, some no's, but many yeses, many yeses.
Okay. So let's revisit these questions at the end once we go through the different forms of content. So let me start off with a story. This is a story of a lady by the name of Sarah. Sarah is a spirited woman in her mid-50s. Obviously she's over the years she's witnessed multiple transformations of payment methods used throughout her life. She's moved from cash transactions to modern electronic or digital payments, which reflects the broad evolution of the financial landscape. So this story is all about Sarah, right? So if you look at the early days, talking around the 1970s, Sarah grew up in a very small town. Her early memories of payments or transactions involved cash and barter transactions, right? Her parents or her family used to run a small grocery store. Obviously, most customers who come to the store buy goods and services using cash, which is the predominant way of paying for goods. They would use either very crisp bills or the jingling coins that we all know of. And sometimes they also bartered goods for goods. So, for an example, if I'm a customer, I could provide eggs, and in exchange I can get flour. I might, trade vegetables for sugar. So I might also do some bartering as well. So these were the very early days of how people paid for goods and services, cash or barter. Then enter the 1980s. This is where we really saw the rise of checks and credit cards, right? So as Sarah entered her teenage years, this is where the rise of checks and credit cards came in. So her parents, who run the grocery store, signed up for what we call as a checking account or current account. In some countries, it's called a checking account. In some countries, it's called a current account. So when you sign up for a checking or a current account, you also get a checkbook. Obviously, you need to have money in the account. So once you have a checkbook, you can now make transactions or pay for goods and services using checkbooks as opposed to using physical cash. So Sarah saw her parents using checks or writing checks for various groceries or rents they have to pay or bills they have to pay instead of using cash. Then in the mid-80s, she grew up, she started working, she got her first job, and this was her introduction to credit cards. Now, life became even more easier. Sarah did not have to carry any cash in her bag. She could now use a credit card. Now she would start using credit cards to make payments. One of the very early credit cards that was issued globally was the Diners Club card. So Sarah was fortunate enough to actually receive a Diners Club card or a credit card and start making payments for goods and services using cards as opposed to cash. Now move forward. Now we enter the era of 1990 or the 90s. This is where the advent of online banking started. So Sarah has now graduated as well while she was doing a job. Now the internet revolution also started during this time, and the internet revolution also paved the way for online banking, right, or internet banking, which was also at that time a groundbreaking innovation. So no longer did Sarah need to carry cash or give cash to friends and family. She could very easily log into the bank's website and just check her bank balance without having to call the bank or anything. Just check her bank balance, transfer money or transfer funds to family and friends, and even pay bills without even having to step into a bank. This was in the 1990s. Fast forward, fast forward to the 2000s. This is where the advent of mobile banking and wallets and mobile payments came in. So as technology advanced, so did Sarah's payment methods. She was now introduced to mobile payments. So she could now use her mobile phone to actually send money to people using text messages or using mobile applications. One of the more common form of, or what we at least know, one of the more common form of mobile wallets that came out was the Apple Pay and Google Wallet, right? You could have Apple Pay and Google Wallets in your mobile phone or in your smartphone. You could store all your payment information, like your card information, and then start making payments either online or at stores, right? Then banks started to introduce what we call as mobile banking during this era, right? Banks launched mobile banking apps, which made things even more easier. So you no longer need to even log into a laptop or a desktop to do banking. You could actually do banking off your fingertips using mobile apps. Then we also had technologies like NFC introduced during this era. NFCs allowed what we call as contactless payments. So have you ever seen or have you ever done tap and pay capabilities at store where you actually don't swipe a card, you tap and pay for goods and services? That's enabled through NFC technology. This was all during the 2000s. Then the concept of real-time payments was also coming in and it was becoming mainstream. And the concept of real-time payments became a lot more mainstream during the 2020s, where you could actually transfer money to friends and family or anyone, or if it's an institution, almost instantaneously. So if you take the United States real-time payments network or UK's faster payment services, these were all technologies or platforms which allows you to send money instantaneously. Most countries today have instant payment platforms which allows you to send money from point A to point B, whether it's an individual or an institution, almost instantaneously. This also gave rise to concepts such as artificial intelligence and machine learning. As we all know, when we start using more and more digital payments, the risk of fraud comes in, right? The risk of money going into the wrong hands come in. The risk of people with malicious intentions hacking into your accounts would come in. So this is where concept like or technologies like AI and machine learning was used to actually protect transactions that consumers do digitally. AI was also used as a way of helping consumers, spend their money wisely. So certain banks introduced AI-based tools to allow consumers like Sarah to, budget their spend. Look at how much money she's spending. So if she's spending a lot of money on shopping, the app will tell you that. Maybe she can curtail down on some shopping and do some more savings. So these are things that technology has allowed Sarah to do as time evolved. Today, you're talking of completely integrated digital payment ecosystems, right? Where her life is completely now embedded in concepts like digital wallets, which she uses for a lot of payments, contactless payments or tap to pay payments in store, and even through and doing various transactions through online or mobile banking using banking apps. Then the concept of buy now pay later has become mainstream over the last 2-3 years, where if there are goods that she wants to purchase and if those goods cost a certain amount of money, She has the ability to actually break those payments into multiple chunks of installments over a period of time and settle the merchant or the SME or the shop. So as you can see here, her journey from cash to modern digital payments is a testament to how much payments in financial technology has evolved. Each innovation has been embraced. She has started using everything from cash in the early days or the 1970s right up to digital wallets or my buy now pay later technologies today. And you can see at every intersection of innovation, based on the time scale, you can see how much she enjoyed the increased convenience and the security and the efficiency in which she can make payments for whatever that she needs. This is the story of Sarah. Now, what's in the future? She is also excited about the possibilities that lie ahead. There's also concepts like central bank digital currencies, which are also coming in. There is a lot of advancements and enhancements in artificial intelligence technology and blockchain adoption to actually enhance payment innovation. So the world of payments, which started with cash and barter-like concepts in the 70s for Sarah, is only going to get more interesting and evolved over the next few years, and as more and more innovative solutions come into the fold, right? So this is Sarah's story. Now, in between, there was some terminology that may not be of too much understand in the audience, so I'll try and explain this as we go along. But for now, this is the story of Sarah, right? Now, I spoke about central bank digital currencies here. This is relatively a new concept. Well, it's not a new concept. It's been there for a while, but it's relatively new if you're actually coming into the space of financial services or into the fintech space, right? Now, what are central bank digital currencies? Central bank digital currencies are nothing but a digital currency which is issued by a country's central bank. So in your case, you will have a central bank. It's a digital form of the Saudi Riyal, which is issued by the central bank. So one CBDC or one central bank digital currency is equivalent or equal to one Saudi Riyal, right? When you have concepts like central bank digital currencies or CBDCs in play, you are now more or less driving an economy towards a complete cashless economy. Imagine an era where when you want to purchase something from a retailer or pay for goods and services like your utility bills, the form of currency used is the central bank digital currency, which essentially paves the way for all consumers in a country to use digital payments as opposed to conventional or fiat payments, right? This concept is now being explored by pretty much 90% of the countries across the world. If you take countries like the Bahamas, they've already introduced central bank digital currencies. Nigeria has introduced central bank digital currencies. I know Dubai launched something, or the digital dirham. Russia has the ruble as a digital form of currency. There is also a new concept called BRICS, which is a combination of countries, which includes Russia, India, Brazil, and a few other countries, which is forming their own community with its own form of currency, which will facilitate trade between these countries. So this is how powerful these concepts are. So imagine Brazil buying oil from Russia and actually not really paying through dollars or any other currency. There is a transaction done completely via central bank digital currencies. This is the future that we are heading to. Actually, the future is already here. Some of these pilots have already been done, but this is what you would typically expect in time to come as more and more innovation comes in and as more and more countries start adopting such technology, right? So this is an example of, so if you look at the countries in dark blue, these are countries which are already exploring or already doing central bank digital currencies, already issuing digital currencies, right? Or there's only few countries which has not even thought about. This data is as of 2022, but by now most countries, almost all countries in the world, are actually exploring central bank digital currencies as a form of digital payments to drive towards a cashless economy. Now, you can see from Sarah's story, what we just spoke about central bank digital currencies, things have kept evolving. and it will continue to evolve, right? Now, as you can see from the slide here, globally, digital wallet spend is supposed to exceed $10 trillion by end of 2025. Today, there is roughly 4.5 billion digital wallets in the world, right? If you would put that in context, the global population is about 8 billion, which means there is over 50% of the population that actually possess a digital wallet in their possession. So that's how much these ecosystems are moving. And digital wallets were one of the fundamentals of actually enabling cashless in most economies. Now, if you really look at what are some of the key enablers of cashless to drive digital payments innovation, like we spoke earlier, mobile wallets or digital wallets are one key instrument to drive cashless or digital payments innovation. So if you take in China, if you take technologies such as Alipay and WeChat, these are great examples of digital wallets. And I know in Saudi also there is many digital wallets in the domestic market. Then there is this concept of instant or real-time payments. This is the technology that actually enables instant transfers between point A to point B. QR code payments, where the ability for you to scan a code and make payment or receive payment is massive towards driving digital payments or driving towards a cashless economy. Wearable payments, so essentially making payments of a watch that you are wearing with a merchant. Then blockchain and cryptocurrencies, P2P payment platforms. So example, many people use PayPal as a way of sending and receiving money. PhonePe in India is another example of this. There are digital remittance platforms. There are in-app payments. In-app payments are essentially the ability for you to make payments within an app, right? Then there is also these concepts of open banking. I'll not go too much into detail, but the concept of open banking is essentially how banks will collaborate with each other to facilitate multiple scenarios of cross-banking across a community. Financial inclusion solutions. I think there was a session last week around what financial inclusion means. Today, there are lots of countries, especially developed, underdeveloped countries or developing countries, where there are many segments of citizens who don't even have a bank account. So that means they are not financially inclusive in the ecosystem of that country. And there are solutions that is trying to take the concept of financial inclusion to every thick and corner of countries. So that's what you mean by financial inclusion solutions. There's loyalty and rewards. There is BNPL services or buy now, pay later services, which we spoke about. Then for as and when payments or digital payments are becoming a lot more mainstream as we do today, so does security. So there is additional security measures taken to protect digital payments. So biometric authentication is one of them. Enablement of AI or artificial intelligence to detect fraud is key. So sometimes you would receive messages or calls from banks to verify a transaction or verify a payment that you did because something has picked up something unusual. Or you might have card transactions which are scams or fraudulent transactions which you didn't make. These are also picked up by AI or artificial intelligence related technology. We spoke about central bank digital currencies already. Then we spoke about contactless payments as well. All of these, depending on countries, most of these capabilities are used to drive a nation or an economy towards a complete cashless economy driven by digital payments innovation. Now, some countries may not use a certain technology, certain regions might not use a certain technology, but if you look at globally, most of these are used by most countries to drive digital payments innovation, right? This is an example in India, which is one of the most rural parts of India. You can see a guy who's like a very small retailer on the right. You can see the screen on the right. He has Paytm, which is a popular wallet or a payment platform in India. He can accept payments via QR code. Then there is a shop which is selling plants and flowers. They could receive payments digitally. Then on the left, you see, I'm not sure what they're selling. I think it's called Vade, I think in India. And you could also make payments to this guy, which is a roadside shop. You can also pay digitally to this guy. So that's how much digital payments is actually spreading in multiple cities of India and really driving financial inclusion in India. And as you know, India is a It's a massive country. It's 1.1 billion people, massive lands as well. And obviously, to truly drive inclusion of people into the financial ecosystem, you need digital payments innovation to make that happen. And this is an example of it. Now, before we continue, it's also important for you to know how do banks make money, right? Yes, payments are great. We can enable payments from point A to point B. We can do instantaneous payments. All that is great. We can enable fraud detection to ensure that your money doesn't go into the hands of wrong people, or wrong people are not using your cards to make transactions on your behalf, or somebody has just stolen your card and is trying to do something. All of this technology is made available. To make all this technology available, banks need to make money as well. And these are 10 main ways in which banks make money, right? Obviously, in markets like Saudi, where Islamic banking products are mainstream, you talk about investment income, right? Then in other countries, you talk about interest income. Banks make money by lending, letting people borrow money from the bank, right? There is interchange fees that are used during card transactions. There is card issuance or debit card issuance or annual fee. So if you get a debit card from a bank, there is an issuance fee, and there is also an annual fee. Sometimes you don't even know that you have it, but the banks actually do charge, right? Then there is transfer fee. So for an example, every time you make a transfer from your account to another account, there might be a fee, right? There might be a fee. Then there is Forex. So if you Forex stands for foreign exchange. Every time you want to transfer a foreign currency, or you want to withdraw foreign currency, or you want to convert local money into foreign currency, banks earn through this method. There is overdrafts and penalties. There is also subscriptions. So for an example, there are banks who also offer customers products for insurance and various other cashback programs, and they earn from that as well. So I could potentially use my own banking app and actually buy insurance for myself, or buy various other services for myself. I can pay my child's school fee using my banking app. I can channel a doctor using my bank app. So these are what we call as subscriptions and premium services. Then there is digital wallets. Every time you do a transaction on a wallet, there is a fee involved, right? It's very minor, but when it accumulates, it's a lot of revenue for the bank. Then there is also merchant services. So when you actually go and tap and pay at a merchant to buy something, the merchant has to pay a certain fee to the bank, which we call as a merchant fee. And there is also this asset management and investment sources as well. So these are the primary sources of profitability for banks. Now, we'll come back to this topic later, but it's good to understand how banks make money as well, right? Banks are not charities or NGOs. They make a lot of money. We contribute towards their growth and profit aspirations in every country that we work, that we are part of, right? So now let's look at the impact of wallets on payment innovation. Like I said earlier, wallets have played a key role in terms of payment innovation for a number of years, and it's only growing, right? There are four main types of wallets, right? In any market, in any country, in any region, there are four main types of wallets. There are wallets that drives financial inclusion. Now, what do you mean by financial inclusion? Like I said earlier, there are many developing countries, especially in Asia, in Southeast Asia, in many parts of Asia, and many parts of Africa, certain parts of Europe as well. There are severely unbanked and under segments. What do you mean by unbanked? Unbanked is a segment where these people do not have a bank account. Underbanked is a segment where they have a bank account, but they don't do anything with it. They still do cash-based transactions. So wallets can be used as substitutes for bank accounts. So I could have a wallet. So if I have a mobile number, I could actually have a wallet attached to it. That is what you mean by financial inclusion. And one of the great examples of wallets that drive financial inclusion is EasyPaisa, right, which is in Europe. In Africa. Then there are also wallets which enables digital enable. This is also in the underbanked segment. So M-Pesa in Kenya is a great example. And from Kenya, they also went to other parts of Africa. Again, this was also an application or a mobile application or a mobile wallet, which is targeted towards the underbanked or unbanked segments for them to have accounts to conduct financial transactions digitally. M-Pesa and in Kenya and Paytm in India are two great examples of this. Now, if you look at the other the right side of the segment, you go to the bank segment. So the left is the underbanked segments. You have financial inclusion and digital enablement to essentially targeted towards the underbanked or unbanked segments. On the right, these are people who have bank accounts already. For them, it's a question of using wallets for payment convenience. So I could have a bank account, configure my bank account in my Samsung or my Apple phone, and use Apple Pay and other forms of technology to make convenient payments without having to draw out my card all the time. It could also be lifestyle enabled. So if I'm using WeChat, I can also subscribe for lifestyle services, go to my e-commerce page and buy myself a fancy suit using the app, using wallet application. So that's for lifestyle enabled. So these are the 4 types of wallets that are used by consumers of 4 different segments, right? And there could be many as well, but these are the 4 that I picked out, which are the most common ones. So depending on the segment of users, you have a wallet for each of those segments. And this is obviously driving significant movement towards a cashless economy in most parts of the world, right? Now, there is also this concept of super wallets, right? So you're moving from wallets to super wallets. Now, when wallets were first introduced, it was just a simple instrument to make payments. I want to buy something, I use my wallet and I make payment. The merchant or the store gets paid, I get my goods. Now you're talking of much more broad ecosystems wallets, which we call as super wallets, right? Alipay is a great example of a super wallet. WeChat is a great example of a super wallet. Lydia is a great example of a super. These are not just payment instruments. You can also do a lot of other things. For an example, you can buy stocks on these wallets. Yeah, you can apply for a loan on these wallets. You can buy insurance on this wallet. You can pay your children's school fees on this wallet. You can book a appointment for a haircut or a car service on this. So the super wallets are just now beyond payments. And a great example of a super wallet, which emerged recently, is actually PayPal. You and I both probably know that PayPal, when it was introduced first, it was a platform that was used to send and receive money. But during the time of COVID, these guys completely evolved into a super wallet. You can now buy your stocks on PayPal. You can manage your stocks on PayPal. You can track your stock movements and how your stocks are performing on PayPal. You can buy gifts on PayPal. You can buy goods and services on PayPal. You can sign up for deals on PayPal. You can clearly see a great example of a very simple payment platform that is used to just send and receive money. And that was the only thing PayPal did. Evolved into a super wallet, which is not doing just payments, but a lot of other lifestyle services as well for consumers. Now, wallets are also used as digital IDs, right, in certain countries. So for an example, I could use my wallet as a form of identification. So if I go to a hospital, if I want to identify myself as Imran and I am who I claim to be, because there could be 100 other people who is claiming to be Imran Milkasim. So for me to really authenticate and validate myself to the hospital, I can also use wallets as digital IDs, right? So this era is also coming and a lot of countries are also piloting this as we speak. Now, again, to emphasize the importance of wallets and its role in driving payment innovation globally, this is an example of or a table of global e-commerce trends and global e-commerce payment trends. As you can see, digital wallets are one of the primary sources of payments that are used to actually buy goods and services online. So what you see in green is numbers in 2022. What you see in pink is forecasted numbers in 2026. Digital wallets by far is the highest compared to any other payment instrument used to buy goods and services in e-commerce platforms. Credit cards are used as well, debit cards are used as well, account-to-account transfers where I send money from my account to another account of another institution, all these are there. Buy now, pay later is small, but it's emerging and growing fast. Cash on delivery is there as well, but digital wallets are definitely still one of the primary ways in which people buy goods and services in e-commerce platforms, right? Now, let's also move on to the future of banking, right? Before I move on to the future of banking, I have a question. Again, I would appreciate if you can give me some answers, right? Where do you buy your ketchup from? So I understand Heinz is a fairly popular brand in Saudi. So where do you buy your tomato ketchup from?
Getting some mainly supermarkets, a couple of online actually, Amran.
Right.
Mainly supermarkets. Some don't actually use ketchup, so although it's popular, not everyone's using ketchup. But
Okay.
mainly supermarkets.
Okay. So yeah, I think that's the right answer. Firstly, that's the right answer. When you want to buy ketchup, you would go to a supermarket. Now, do you ever go to the manufacturer of ketchup? No. Do you go to the factory which manufactures this ketchup to buy ketchup? No. You buy ketchup from a supermarket, right? Now you use that same example into banking. Now, today, when you want to open a deposit or a savings account, or you want to apply for a debit card or a prepaid card or a virtual card, or you want to apply for a loan, by default, you go to a bank or you might use a banking app, right? Correct. So that's like buying ketchup from the manufacturer or the factory. Going forward, or it's already present as well, what might happen is that you might no longer go to a banking app or the specific app of the bank that you're using, or go to a bank branch to buy any of these products. You might actually go to a supermarket like your Lulu Market or your Carrefour or any of these hypermarkets that you have in Saudi and actually open a bank account. So now imagine a scenario where you are in a supermarket, right? You are in a supermarket, and let's say you are in Spa or Lulu or Carrefour or at Panda. At the counter, you can actually apply for a loan, or you can actually, open a new account or even apply for a new debit card. That's the future of banking, right? So what's going to happen is just like in the case of ketchup, where you don't go to the factory or the manufacturer who's actually manufacturing ketchup, you buy it from a supermarket. Banks will now become the manufacturers of products. And these products can be bought by consumers in supermarkets or various other third-party entities and not necessarily banks. This is where the banking ecosystem is moving, and there's a word for this. It's called banking as a service, right? Banking as a service is a model where traditional banks offer their infrastructure. So for an example, Saab in Saudi can offer their infrastructure and services to non-banks like Lulu through APIs or application program interfaces, where Lulu can open bank accounts on behalf of Saab, right? So Lulu can offer financial services to their customers, or Carrefour can offer financial services to their customers, or even Spa or Panda can offer financial services to their customers using Saab's banking infrastructure, right? This is what we mean by banking as a service, right? Now, Saab does not need to have a branch at Lulu or any of these places, because Lulu or Spa is already integrated to Saab, and therefore, if I'm at the counter, I can go to the Lulu counter and open a new bank account or apply for a new debit card or a prepaid card without necessarily knowing Saab is behind enabling this. This is what we mean by banking as a service, right? This is the future, right? Banks will still continue to do their core operations, right? So banks, I mean, we know banks as institutions who lend and store money for us. But there is a bigger role that banks play. They have to manage their risks. They have a front office. They have balance sheet management. So these are all very core to an operations of a bank. But the other services, like the products, can also be sourced through third parties, or it can be provided through third parties for banks' lands. This is enabled through banking as a service platforms. Now, banks can work with non-banks in multiple ways, right? And these are some examples of how banks have collaborated with non-banks. So if you take tech partnerships, Apple launched Apple Card with a financial institution called Goldman Sachs. But I don't think you knew that. All you knew was you were all blown away by the Apple Card and Apple, which is a tech company launching a banking product. But there was a bank behind the banking product, which is Goldman Sachs. Similarly, Google launched a Google Wallet. But Google is a tech company. They're not a bank. They don't have a banking license. But Google partnered with Citibank and launched a Google Wallet. There has also been instances where banks have collaborated with telecom companies. So Vodafone is a telecom company, and they, with the bank, launched M-Pesa, which is the example I spoke about, which is a wallet platform to allow customers who don't have bank accounts to actually open wallet accounts and conduct financial services transactions. Then you can also have retail partnerships. You all know of Amazon. Amazon partnered with JP Morgan for a Visa card, where every time you use a Visa card issued by JP Morgan on Amazon, you get points for that, or you get cashbacks for that. Walmart did a similar thing with an institution called Green Dot. Then there are payment service providers. An example of a payment service provider is PayPal. PayPal partnered with Bank of America to provide an institutional payment platform. Stripe partnered with HSBC to offer cross-border payments. Then there are initiatives around Internet of Things, or you call this IoT, right? Samsung partnered with MasterCard. So there was a pilot done in Pause. I think that was a win commercial, where you can open your fridge, you can look at what's missing in your fridge, use MasterCard technology and order goods and services for your fridge inside your fridge itself, right? By clicking buttons. Visa had a partnership with Honda, where Visa would equip Honda vehicles to essentially allow vehicles to pay for toll, fuel, and various other services related to the vehicle within the vehicle itself, right? And there are other examples how banks have collaborated with fintechs, which is a very, very common partnership, right? There are many examples in Saudi as well. I've seen where banks have collaborated with fintechs to offer innovation into the market. Then there is a lot of examples of how banks have collaborated with social media platforms, right? So for an example, WeChat in China, which is the largest social media platform used by pretty much every Chinese person that I know, partnered with a bank, which is called Industrial Commercial Bank of China, to offer payment services within WeChat. So when I use WeChat and I want to buy something on WeChat, I actually buy it. But what happens behind the scene is that the payment is actually enabled by ICBC Bank in China. We don't know that, and we don't need to know that as consumers. These are great examples of how banks collaborate with non-banks to offer services to consumers, right? Let's also talk a little bit about merchant payment ecosystems. Now, this is a bit of a tough one. I'll try to simplify this as much as possible. Now, who is a merchant? Every time you go to Lulu and buy something, Lulu is a merchant, right? Every time you go to booking.com and book a hotel, booking.com is a merchant. So merchants are businesses or individuals that sell goods or services and accept payments. Customers are us. We are the individuals who purchase goods or services from merchants. Now, there has to be a way to purchase goods, right? There has to be a way for customers to pay merchants. So payment gateways allow that, right? Where payment gateways facilitate online transactions by securely transmitting our payment data to payment processors. Payment processors are companies that handles transaction between the merchant and the customer's bank. So today, as a customer, I might have a bank account with Saab Bank, and a merchant, Lulu, might have an account with, say, Riyadh Bank. So how do I facilitate payment from my bank account at Saab to the merchant's bank account at Riyadh Bank? That's done by the payment processor, right? Then there are acquiring banks. There's a concept called acquiring banks. Acquiring banks are banks that process credit or debit card payments on behalf of the merchant. So Riyadh Bank is the acquiring bank of Lulu, right? There are issuing banks. Issuing banks are banks that issue credit cards to customers. So if I use a credit card to make payment, in my example, the credit card was issued to me by some, right? Then there are card networks. You know, when you get a credit card, it can be a Visa card or a MasterCard or an American Express. In your case, it could be even a Mata card. There are card networks. Then there are payment service providers. So all those technology that you see, like the POS terminals or the payment devices that you see at a merchant, are provided by payment services providers. So these are the key roles or actors in a payment ecosystem or a merchant payment ecosystem. Now I'm trying to simplify this as much as possible, but this is just understand the different roles that each of these entities play in facilitating a payment. Now, just to illustrate this, I'll take a quick example. I am a card holder. Let's say I want to buy coffee, right? So I want to buy coffee. I've gone to a coffee shop. I'm not carrying cash. I am a card holder. I have a card. What do? I give the card to the merchant. What does the merchant do? Merchant either swipes the card or taps the card, right? Now, so step number one, there is a payment initiation. I provide the card to the merchant. Merchant will tap or swipe the card. Step number two, there is an authorization request. Merchant sends the request for payment to the merchant's bank, which is called the acquirer bank. The acquirer bank will send the request, the authorization request, to the issuer bank. Issuer bank is the bank that has issued me a card. So step number three is the process where the acquirer, the merchant's bank, sending the payment request to the issuer bank. Why is the payment request going? Because if I'm to pay by card, firstly, the issuer need to verify that this is a valid card. This is not a block card. Number three, more importantly, the issuer also needs to verify and tell the merchant bank or the merchant's bank that there is sufficient funds to complete this transaction. So the issuer will send the response, which is called the authorization response, which is step number 4 to the merchant banking. So this card is fine. There's money. It's a valid card and it's fine to proceed. The response is sent and the transaction is completed. And now when you make certain transactions, obviously you might be receiving what we call as an SMS notification or some confirmation of your transaction. So when the transaction goes through, point number 6 is the transaction notification that you receive on your phone saying the transaction has gone through. This is a very simple example of how the flow works for merchant payment ecosystems. Now, this is a detailed example of how this works, but I will not go through all of these examples in the sake of time, due to the sake of time. But here I've given you a very simple example of how a customer initiates a payment, how it hits a payment gateway, what the payment processor does, what the acquiring bank does, what the card network, which is Visa or Master, does, how the issuing bank sends the authorization response, and the settlement happens. What do you mean by settlement is that if I use my card to make a payment to the coffee shop, because the coffee shop is not receiving physical money, they still have to have a way to receive money. That money is received by the coffee shop, in this case, the merchant, is received by the merchant, but through the merchant's bank, and that's what you call as a settlement. The acquiring bank settles the merchant for all transactions that the merchant executed through card transactions, and that's how merchant gets paid for all card transactions that a consumer does, right? I'll move forward. Let me just do a quick check on time. Okay, I'm almost out of time. So then there is also concept of interchange fees. What do you mean by interchange fees? These are fees that an acquiring bank will charge the cardholder's bank, and that's how banks make money. This is what we spoke earlier, right? Okay, then there I've also explained a little bit about alternative payments. We spoke about BNPL already, or buy now, pay later already. And there's also bank transfers that can be done through payment gateways and account-to-account transfers as well. I've been given you some examples here. Then there is also concept of POS solutions. What do you mean? You've probably seen these devices anyway at stores. These are very small devices which can accept payments. This is also one of the key instruments that was used to actually drive digital payment innovation, where you can drive complete cashless payments using such solutions. These are, in the early days, we had physical terminals that can accept cards and QR and so forth. But now you also have something called soft POS, which means if you have an Android 11 device with NFC capabilities or near field communication capabilities where you can tap and pay, any Android device can also be used as a payment instrument. So if you're a small business or an entrepreneur and you want to receive money through cards or tap and pay capabilities, if you have an Android phone and if you have a merchant account with a bank, you can actually start receiving money on the very same Android device that you're using for your regular phone calls and your Facebook and your social interactions in a WhatsApp messaging. So imagine the power where your regular phone you're using today can also be used as a payment instrument, right? So these are some features there. I'll skip through tokenization. All this has given rise to what we call as a new reality, right? All the innovation that I spoke of now has given rise to what we call as new reality. The new reality is that every fintech founder, if I'm a fintech, I dream of a banking license. Remember, to conduct any financial transactions or at least to store money, maybe the right thing to say is to store money, you need to have a banking license. The only institution that can store money is actually a bank, unless there are other licenses that allow you to store money. A fintech can't store money for a longer or an extended period of time. So for an example, a fintech can't open a savings account for you and store your money. But that's the dream of every fintech, to have a banking license where they can offer complete banking services, right? The bank CEO on the other side wants actually dreams of a working app. Now you see a connection here. The fintechs have great technology, great innovation. They are able to innovate extremely fast and offer great services for customers or consumers. But they can't offer banking services because they don't have a banking license. On the other hand, a bank has a banking license, but they're lagging behind on innovation compared to a fintech. Some of these banks can't even get a working app, whereas the fintechs could have a working app up and running in no time. That's the dilemma we have today. Now, all consumers, like we agreed before, continue to demand great financial services experience. They continue to demand great banking services. However, they don't continue to demand that from banks. It could even be from a fintech, it can even be from a non-bank. That's the fundamental shift that we are experiencing today as a result of all the innovation we are seeing around payments and various of the innovation around the financial services industry. Now, all this behavior, all this change is driven by changing shifts in consumer behavior. But what is this behavior we are talking about? The rise of digital banks or neobanks, where there are no branches of branches, it's completely operated digitally. This is one reason, and also the rise of innovative fintechs. This is driving behavior of consumers to work with non-banks as opposed to banks because they like the personalization and the experience that some of these new startup, new age banks provide as opposed to conventional banks. Now, this is an example of Revolut. Revolut is probably the second or third largest digital bank in the world. The largest digital bank in the world is a bank called Nubank, which has close to 90 million customers. This is probably second or third. As of end of last year or 2023, these guys have 38 million customers. Their revenue is $2.2 billion, and that's a growth of 95%. And their net profits are very, very healthy too, right? Their net profits are extremely healthy as well. So you can see Revolut is a complete digital bank. They have no branches. They operate completely digitally. So the only way you can open an account with Revolut is only through digital channels, either through their internet banking channels or their mobile banking channels. You will only speak to people online. Most often than not, these will be bots. But because of the power of experience and the personalization and the wealth of features they provide, consumers have gone with Revolut as opposed to conventional banks. So this is the power of what these new age digital banks or fintechs or neobanks are enabling, where some of the conventional banks are lagging behind, right? Now, what do most people do even on these apps? It's pretty much payments, sending money from A to B, doing things around payments. Then these tools have all these very nice tools built on AI, which advises consumers of how to spend their money. This is what they do, but they do it extremely well and probably better than a conventional. Right? So the rise of fintechs, neobanks, digital banks delivering innovation at superior rate than conventional banks is the reason for change in consumer behavior. That's why the shift is happening where consumers prefer to actually interact and work with non-banks or fintechs as opposed to conventional banks. Now, what can banks do? They'll have to innovate. There are three major enablers of innovation today, which is driving innovation or impacting payment industry participants. One is consumer demand, the other is around business model innovation, and the other one is around infrastructure. Now, I'll not go through all of these, but this is material you can read. But if you look at consumer demand, there is a lot of demand for use of wallets and buy now, pay later services. All of these we spoke about. Using installment payments as a way of payments, using QR payments for contactless payments, and then there is also NFC-based payments. This is consumer demand. Then there is also the complexity of infrastructure. Lots of banks are now trying to simplify and get into modern infrastructure to serve the consumer demand, which we spoke now. Business models are changing. So what do you mean by a business model? 1970s, Sarah was using cash and barter methods to make payments. 80s, the model changed to cards and models evolved to cards and checks, right? 90s was about online banking. 2000 was about digital or mobile payments. 2020 was about instant payments. So these are changes in business models. So these business models continue to evolve. BNPL or buy now, pay later is a big deal now. Lending products for how SMBs or SMEs or individuals borrow or go for lending products, those are fundamentally going to change. And these are things that the banks would need to worry about as they try to innovate into the future, right? And I've given you a lot of examples of what are the consumer trends, what are the infrastructure trends, and what do you see in terms of business model innovation, right? And you can go through this later on. Fundamentally, if you look at this slide here, this slide essentially provides everything that most banks do in terms of driving digital payments in financial services or banking. Now, not all banks will do everything, right? But all banks will do some of this, right? Seldom will you find one bank which does everything, right? Not one bank will do everything, but all banks will do some form of something in this slide, right? Whether it's account opening, whether it's buy things to pay, or whether it's pay other people, whether it's to get paid, whether it's a loan money, or whether it's to create installment-based payments or to manage finances or how they save money. This essentially is the full radar of digital payment services or digital banking services that most financial institutions will tend to provide. Yeah, I think so. Then there is also this concept of embedded payments, right? Embedded payments are payments where imagine you're in an e-commerce platform, you want to buy a phone, but you don't have all the money to buy a phone. The platform allows you to get a loan then and there and then pay for the phone based on agreed parameters like the repayment period and the amounts. That is what you mean by embedded platforms. And there is technology that allows you to do this, right? This is an example. And there are many players who enables it, like the banks and various other institutions, but this is what we call as embedded finance platforms, right? Right. So when you put all of this together, you can see on the so all of what we spoke today, all of what we learned today, there's so much innovation happening on two sides. There is consumers, there is merchants. Obviously, there has to be consumers and merchants because consumers need to pay merchants and the merchants need to be able to accept money from consumers. Around this, there is so much of innovation that has come in. E-wallets to credit cards, to business cards, platforms, to POS hardware, to installment-based platforms, to acquiring capabilities, to credit card networks, to associations. All of these have come together. All of what we spoke, wallets, billing platforms, POS, all of these have now come together, and this essentially forms a complete digital payment ecosystem in most countries and regions. Right? So again, if I were to ask you the question, do we all agree that banking services continue to remain relevant for us as consumers? Absolutely, yes. That's what you told me. Rethink the question around, Do we all agree that banks may not be necessary for banking services in the future? And absolutely yes as well, given where the trends are moving, right? With that, I will conclude. I know I kind of ran a little over time, but Karim, if there are any burning
Amran, actually, this was extremely insightful. And yes, on both questions at the end for the majority of our attendees here. So thank you very much for this insightful information on payments and the evolution of banking in general. We have several questions coming in. I don't know how many questions we're going to be able to take just because of time, but many requested even a very brief 1 or 2 minutes on tokenization because they feel like this is extremely important and it's the future. So I'm going to give you a minute or two just to talk quickly about tokenization, and we
Sure.
can address other questions as well.
Yeah. So here's an example of tokenization, and the intention of tokenization is that you hide or mask your payment information. So for an example, what do you mean by payment information? Your card details, your name, your card details, and your expiry date of your card, whether it's a debit, prepaid, virtual, or credit card, is card information. Tokenization is a process where you actually mask those details. So if you look at two examples of adding a card to a wallet. So for an example, if you want to add a card to a wallet to store your payment information in your Apple Pay wallet, there is a tokenization process that happens. Example number 2 you see in this slide is how do you actually pay with a card using tokenization. So if you take the first example of how to add a card to an Apple Pay wallet. So when you, step number 1, when you add a card to an Apple Pay wallet, the device, the app in your wallet, the wallet in your device, the Apple wallet in your device will send the card details to the Apple server. Now the Apple server will then send the card details to your issuing bank. So assume your card was issued by Riyadh Bank, those details will be sent to your issuing bank, which is Riyadh Bank in this case. Now Riyadh Bank will be connected to what we call as a TSP or a token service provider. So a token service provider or a TSP, as we call it, is an absolute necessity to enable tokenization because the tokens are issued for tokenization by a TSP. So once the request is sent to the TSP or the token service provider, obviously the request is validated, a payment taken is generated, and a token key is then generated. This is passed again, step number 6, passed again to the issuing bank. The issuing bank receives it. Issuing bank sends this back to the Apple Pay server, which is point number 8, and the token is created and the tokenization process is complete. Right? So every time you make a payment now, you actually don't need through your Apple Pay. You can just tap and pay. You don't have to provide your card details. Same with paying by a card as well, right? It's almost a similar process. It's almost a similar process where again you have absolutely need to have a TSP provider because it's a TSP provider which actually generates the token. Now tokenization happens across card networks like your Visa, Master, Amex, and it can even be your local MADA card as well. Karim, I hope that answered the question.
That's very useful, very high level insights on tokenization. So I will encourage the attendees here to review this slide in detail and maybe go through the flow. I think that would be very helpful. Amran, we've got a lot of questions related to cybersecurity, to fraud, to AML. With all this technology coming into play, people sometimes feel uncomfortable using technology. Now, today, you touched on POS, the soft POS, how the potential abuse of such technologies. Can you elaborate on what payment institutes, financial institutes, banks, and service providers are like? What precautions are they taking to ensure the safety of the consumers and the merchants in that case?
Yeah, no, great question. I think and like I said, right, as digital payments has evolved into multiple instruments of driving digital payments innovation, so has the concerns around security. I think tokenization is also one way of actually, protecting transaction data. There is also the concept of biometric-based authentication to ensure that you're authorizing your own transactions. Banks are also investing heavily in fraud and anti-money laundering systems. A lot of these fraud management systems are now completely based on artificial intelligence-based technology, where these systems are able to learn from incidents and keep evolving to future incidents. So a lot of investments are being made on that side. On the merchant side also, there's a lot of, again, fraud is a key angle for merchants as well, which has where a lot of banks have invested on. Biometrics-based security is another example as well. Two-factor authentication has been around for a while, but that's now being replaced by concept like digital IDs and digital tokens, which are now providing much more enhanced security than two-factor authentication or password-based authentication. So this space is completely evolving. There are multiple types of security measures you can take depending on the kind of transactions that you're trying to secure.
Thank you for this, Amran. Maybe one more question on BaaS. I think that we're going to take this as a last question. I don't want to take more time from the attendees, and we do have, after this question, another 5 minutes to just answer some general questions for the attendees, so do stick around. If you have to leave and you are leaving, please make sure to rate this session at the end. When you're leaving, you will get a rating, so do please rate this session and give us your feedback so we can always continue to improve. That's one more question for you, Amran, here. BaaS, and we've talked about it, and we've talked about how banking products are going to be offered through different channels, whether it's retailers, supermarkets, and such. First of all, do you see can you talk more about the benefit that those retailers will have offering these services to their customers? And also on the banking side, how is that going to impact the banks, and will it give them more or less control overview on what is happening with potential clients?
Oh, great question. Thank you, Karim, for that. Let me start with the banks. Banks are probably going to get access to a segment of customers that may have previously not had access to. And probably also creating a new stream of revenue that they didn't have to. Now, when we spoke about in this slide, when we spoke about the primary sources of revenue that a bank has, right? Let me just, okay. These are the common sources of profitability or revenue for banks. 11th one could be the fees that they can charge by extending banking services through non-banking channels, which can offer more convenience to customers as opposed to working with the bank. So in that sense, banks can actually create a new source of revenue. For the retailers, they're also able to now start creating some great offerings around what they offer. So for an example, you could create a co-branded debit card issued by a bank, which is co-branded with Lulu, and drive cashback based offers, which might drive a lot more stickiness and more customers to the retail outlet, right? There can be buy now, pay later services or very interesting lending products that the retailers can offer through banks, which would help consumers purchase or procure their products, which may have been an issue in the past. So there are some very interesting use cases that come about both for banks and for retailers as well as a result of enabling banking as a service. But of course, whilst it sounds very easy to do it, banking as a service also involves some upgrade of banking infrastructure. For an example, you really can't do banking as a service with closed technology infrastructure. So your infrastructure as a bank needs to be more open, more exposable, so that each of these institutions can offer these. So for an example, assume I am on let's take a national airline. Let's say I am on Sri Lankan Airlines. I want to book a vacation for my family. That's costing me $10,000 to go to Europe, but I don't have $10,000. So imagine a possibility where I could apply for a loan product on the Sri Lankan Airlines website, which gets connected to the bank's infrastructure The loan decisioning can be done then and there, and the details are passed, approved or not. The loan is approved, and then and there on the site itself, I get the loan and I use the loan, agree on the prepayment parameters, and I actually buy my tickets to be able to go on that vacation. Now, that's the true power of banking as a service. It's completely seamless, it's completely integrated. On one side, Sri Lankan Airlines just got a customer who they would have lost because the customer wouldn't have been able to afford this, and they were able to sell something new. Bank got a customer which they may have not had access to before, and they actually sold a loan product through a third-party channel. And you can keep replicating these different third-party channels as additional sources of revenue for banks.
Amazing. Thank you so much, Amran, for that. Amran, last question that we ask all our speakers is, what sort of resources or sources would you recommend our attendees to look at to get more info on payments in general?
Yeah, there is. Actually, firstly, let me also tell you that you should probably attend all 10 sessions of the Fintech Summer series, which is organized by Fintech Saudi. And I didn't get paid for saying that, but I really think there's a lot of value in all these sessions, because all these sessions in some form or shape will touch payments. Last week's session on financial inclusion touches payments. A couple of sessions I saw on super apps which will touch payments. So firstly, I think you should definitely sign up and register for Fintech Saudi. And that's not a paid advertisement. That is coming genuinely from my heart, because I have also registered to follow the rest of the sessions, because I also believe there's so much to learn from the other speakers. Second, I think if you look at, if you go to Investopedia, I think that's a good site to learn a lot about some of the modern payment trends. Look, and there is also a lot of research reports that you see on McKinsey and a few other sources, which actually talks a lot about how payment has evolved and what the future of payments might be. I use a lot of examples from IDC. So for an example, if you look at the slides, set of slides here, sorry, let me just go back there very fast. And 1 second. Okay, if you look at some of these slides here, these are all IDC slides. There is a lot of information in some of these analyst websites as well as to how the payment industry is evolving as well.
That's amazing. Thank you, Amran, for that. Thank you, Amran, for this very informative session. It was heavy, yet very, very insightful. For all our attendees, we will be sharing those slides, so you will have time to go through the material at your own pace. To be able to access those slides, make sure that you are you've joined the Telegram group if you haven't already. We'll share the slides along with the recording of this session and all upcoming sessions. Again, don't forget to go through the YouTube channel and look at the previous edition of the Fintech Summer Sessions. So they're all there. They're very useful as well if you want to learn more about the topics that were discussed in previous years. We've had some questions, Sagar, I think, related to the certificates, a couple of questions on that, not much, fortunately, but mainly on the slides. So I think that was addressed on the slides. Any other housekeeping questions that we need to look at or answer for our attendees today?
No, again, Imran, thank you again for joining. It's been super interesting and really appreciate your time. Most of the questions I think have been answered. My fingers are really tired from all the typing. But no, thank you everyone for attending. We do have a few questions just on, am I registered to attend? If you've logged in with the email and you log in with the same email every time, on my Zoom account, for example, I don't log in with the email because it just automatically logs me in, but I am logged on that basis. So don't worry too much. We will get it sorted if there's 1 or 2 sessions where you just feel that you haven't logged in. But as long as you've registered with a specific email and that email has gone to your link and you click on that Zoom link every time to join, you'll be sorted. You'll be fine in terms of joining.
Perfect. Amazing, Amran. Thank you so much. It was very insightful. And to all our attendees, don't forget to rate this session. And thank you so much for attending, and looking forward to seeing you next Tuesday for another exciting session of the Fintech Summer Sessions. Thank you very much, and thank you, Amran.
Thank you.
Thanks, everyone. Take care.